Right, that's the management of AU Small Finance Bank. A big boost coming in there. But let's go on and get a new guest on board now who's joining us. Hi, thank you so much for joining us on the show. Rajesh, let me come to you for a counter that you have picked out for us. You picked out the BPCL for us. Now, while BPCL and HPCL, they're all in focus on the back of the cabinet nod for LPG's loss relief. On the charts, what do you see?
Yes, so on the charts, we are seeing a strong traction in today's session. The stock is almost up more than 3%, and on the daily chart, we are seeing a higher bottom kind of structure. In fact, with today's gain, prices have engulfed last 4 sessions, and also on the weekly chart, we are seeing a bullish hammer pattern. With today's gain, prices have reclaimed its 89 EMA, and we expect that in the coming week, this positive momentum would extend possibly towards the levels of 340 to 345. So bias is positive in case there is any dip towards 315 to 316. That would be an opportunity, as we expect the outperformance to continue in the coming week.
Yeah, so that's BPCL on the charts as well. But moving on to the next counter that is in focus, and that is Ramco Cement. Now, Ramco Cement is also an earnings candidate, just come out with its Q1 numbers. On a year-on-year basis, then the revenue is seeing a downtick of 0.9% coming in at 2,747 crore on a year-on-year basis. The net profit, however, is seeing a jump up of 124% on a year-on-year basis at 85 crore. The EBITDA is also seeing a jump up of 24% on a year-on-year basis at 398 crores versus 320 crores, and the margins are at 19.2% versus 15.3% on a year-on-year basis. On the back of that, Ramco Cement, however, is reeling under pressure. Now, the results have been below the street's estimates, and on the back of that, Ramco Cement is down and out almost 4.8% in trade.
Okay, so that's Ramco Cement for you. The stock is down nearly 5% as we speak, but another stock that's buzzing based on earnings is Cummins India. Rabinder, I believe it was a good start, and how is the stock reacting to that?
Well, yes, on the back of a good set of earnings, Cummins India is in focus, where company reported revenue at 2,907 crore as compared to 2,304 crore, with an uptick of more than 26% year-on-year basis. And if we talk about EBITDA, then EBITDA also saw a good uptick of more than 33% year-on-year basis, and margin saw an uptick. Margin has increased from 20.3%. 21.4% on a year-on-year basis, and management in the con call said that the export has been performing well due to focus on the end markets and delivery timelines, and they expect domestic demand to continue, but they are cautious on the export. So back of the strong quarterly result, Cummins India is in focus, and the stock is holding a gain of more than 4%.
Alright, that's Cummins India on the back of its Q1 numbers, but you've also picked it out, Rajesh, for us on the charts as well. That stock is doing very well in today's trading session. In fact, in the last 6 months, has been a clear outperformer. What do you see on the charts? Do you see an up move slated in for Cummins India?
Yes, definitely an outperformer. In fact, if we see, prices are now crossing its last year's August swing high. So a breakout from last 1 year's consolidation, and we expect that this positive momentum is likely to continue. Possibly its previous swing high somewhere around 4150 can be retested in the coming week, and then onwards it can move towards 4300. So buy candidate, any dip should be taken as a buying opportunity. Strong volumes are also visible on the daily chart.
Strong volumes visible on daily charts, that's the word coming in from Cummins India, and a buy rating coming in from Rajesh as well. But Kanishka, you have picked up BSE for us, and I believe brokerages have come out with their report on the back of earnings. What do they have to say?
Absolutely, Ashisha. Well, BSE, like you said, is in focus because of its Q1 results and mixed brokerage reactions coming from several brokers. Now, Nuvama first up has highlighted a sharp jump in performance in Q1. Index options market shares rose by 23.8%. Revenue grew about 58% on a year-on-year basis. EBITDA that surged 120% year-on-year on strong operating leverage. That's the word coming from Nuvama. However, it has cut the FY26 to 28 earnings estimate slightly, citing risk from the upcoming expiry day shift, but raised its target price to 2,812 20 rupees. Avendus meanwhile has downgraded BSE to add from buy earlier with a revised target of 2590 rupees, citing concerns over lower premium realization post expiry changes, though they still expect a 45% premium CAGR over 25 to 27. Now Motilal Oswal, that one remains neutral with a target price of 2600, flagging market share risks but raising earnings estimates on lower costs. So that's how the brokerages are reacting to the Q1 results. However, if you look at the stock, it's been trading about 2% lower.
Okay, so that's BSE for you, down 2%, and brokerage houses are also mixed when it comes to this one. But let's also put the spotlight on an auto company then, Hero MotoCorp. It reported its results. Management has come out with its commentary. We have Avendus, which has maintained its ad rating on the stock. They've revised the target price upwards to 4675 versus 4425 earlier. They're saying that the performance of new launches and company's ability to sustain volume momentum going forward will be the key trigger for the stock. They're also saying that company is now sharpening its focus on electric two-wheeler space, and this is likely to be a positive. They are expecting volume growth of about 3 to 4% over FY 25 to 27 period. Motilal Oswal, meanwhile, maintaining their buy stance 5355. That's their target price. They're saying volume guidance is intact, led by positive rural sentiment, and that is what the management highlighted in the con call as well. They're saying that they expect revenue CAGR of 8%, EBITDA CAGR of about 8 to 9% over the period FY 25 to 27. The stock, of course, is sitting with a cut of nearly 0.8%, but the management commentary was very positive, and the stock in focus on the back of that.
All right, that's Hero Motor in focus on the back of that. But another counter that is not doing well is Sun TV on the back of Q1 results, which has missed the estimates. In fact, it has also gotten downgrades from brokerage notes. On the back of that, that's down and out more than 1.5% in trade. Let's take a look at the numbers then. First up, the net profit is down 5.4% on a year-on-year basis at 529 crores. The revenue is also seeing a downtick of 1.8% at 1,290 crores. The EBITDA is down 13% at 619 crores, and the margins are also seeing a downtick of 672 basis points at 48% on a year-on-year basis. They've also declared an interim dividend of 5 rupees per equity share, but it is the brokerage notes that are also weighing heavy on Sun TV. One is by Nuvama, that's maintaining a buy target, but they've cut the target price to 805 rupees from an earlier 875 rupees. They feel that the performance has been weak, and they're cutting the FY 26 estimate, 26 and 27 EPS estimate by 4.6 and 4.9% respectively. Motilal Oswal is also cut the target price. They maintain a neutral stance, but they've cut the target price to 600 rupees. On the back of these downgrades and the results, Sun TV is in focus with cuts of 1.6%.
Okay, so that's Sun TV network for you. Brokerage houses continue to remain bearish on this counter. But Rajesh, you've picked up Maruti Suzuki. What do charts indicate for this auto major?
If we see today it is trading flat, but if we consider the weekly chart, the stock is posting healthy gains for the week. It's up more than 2.5%. In fact, if we see last 3 to 4 months, the stock has been consolidating, but now the prices are coming out of a range. A symmetrical triangle pattern breakout is visible. In fact, the auto pack has been in action this week, but Maruti was not showing strength. But today in last 2 sessions, we have seen action. So possibly Maruti can have a catch-up move in the coming week. Possibly first it can move 13,200 and then possibly towards 13,500. So bias is positive on the Maruti and seems likely to outperform in the coming week.
Okay. Only 6% today, but let's keep it going with the IT sector then. And TCS, Rajesh, you have picked up this one for us. What do charts indicate?
So if you see the charts, weekly charts, the stock has been under weakness for the last 5 weeks, but it has now reached its April swing low. And in April, we saw that stock rallied from the levels of 3,000 to 3,600. So prices are retesting those levels, and if we see the indicators are oversold. RSI is in oversold zone, and also we are seeing some positive divergence. Also on the chart, we are seeing a double bottom kind of formation. So in the coming week, we expect a trading bounce counter, and possibly levels towards 3250 can be expected. So on the downside, with a stop loss of 2970, 2950, we are expecting a bounce towards 3200 to 3250 levels.
All right, moving on to the next count in focus today, and that's Schneider. In fact, Schneider is one of the top losers in trade today. It is trading with cuts on the back of its quarter 1 results. It's in fact locked in the lower circuit. It's down almost 5% in trade today, locked in lower circuit. Schneider, let's take a look at the numbers then. The net profit is down 14.9% on a year-on-year basis at 41 crores. As far as the revenue is concerned, the revenue is seeing a slight uptick of 4.8% on a year-on-year basis at 622 crores. But the EBITDA is down 15% on a year-on-year basis at 69 crores, and the margins are also seeing a downtick of 263 basis points at 11.2% on a year-on-year basis. On the back of weak set of results coming in for Schneider, that stock is blocked in lower circuit with cuts of 5%.
Alright, let's also address Grasim's numbers that are flashing for you at the bottom of your screens, where losses have expanded on a year-on-year basis. We have revenue that saw an uptick of nearly 34% on a year-on-year basis. The stock, of course, is not reacting much after it reported its numbers. The stock, in fact, has recovered from the lowest point of the day, sitting with a cut of nearly 1.8% as we speak. Net loss, it reported a loss of about 52 crores same time last year, and that has expanded to about 118 odd crores this time around. Margins have also declined a tad bit. They've contracted to 4.2% versus 4.7% margins that the company had reported same time last year. So that's as far as Grasim is concerned. The stock, of course, ahead of its numbers also, it was sitting with a cut, and it has recovered a slight bit over the last few minutes. But Rabinder, you've picked up GCPL for us. What is the news flow over here?
Well, yes, GCPL is in focus on the back of their weak quarterly result, where company's revenue saw an uptick of approx 10% year-on-year at 3,662 crore, but Street was estimating a revenue at 3,690 crore, and net profit was, company reported a net profit at flat at 452 crore as compared to 451 crore year-on-year basis, but Street was estimating a net profit at 500 crore, so it was below the Street estimate. And if we talk about EBITDA margin, then EBITDA margins also saw a downtick of more than 250 basis point year-on-year basis from 21.7% to 19%. And if we talk about volume growth, then company reported volume growth at 8%, which is in line with the Street estimate. So on the back of the weak quarterly result, Godrej Consumer is in focus, and the stock is down more than 1.5%.
All right, with that, we're completely timed out on this edition. Rabinder, Kanishka, Rajesh, thank you so much for taking the time out and joining us. But the 4th season of this prestigious Times Now Amazing Indian Awards will be held in the national capital on August 11th. Dignitaries, change makers and luminaries from across the country will come together to honor these exceptional individuals. Let's take a look.